If you're in Michigan, you're probably wondering what is happening with the car insurance rates because they're skyrocketing. And it's not just inflation, it's not just the cost of the cars and all the repairs and the delays. And yes, those are pieces of it. But the one thing that you may notice is as of July 1st of 2023, this recoupment fee is showing up on your bill. So what that is it's called the MCCA fee. This is something that the Michigan's Catastrophic Claims Association is responsible for. Essentially, we call it PIP, Personal Injury Protection, and we'll actually go a little bit further into what PIP is and actual background of it so you have a better understanding of why this is there. But more so, the biggest thing is you're seeing the price change. It's going up $48 per vehicle. So if you have 2 vehicles, you're $96 more as after July 1st of 2023 than you were the previous year. What that does is essentially the state has required, and it's changed over time, but the state requires your insurance company to charge or pay for the first $600,000 if you're injured in a medical claim. That's why we have the personal injury protection. By the way, I'll link the video at the end of this so you can understand PIP better. What that does is once that maxes out and the insurance company has paid their portion, now the MCCA, the Michigan Catastrophic Claims Association, kicks in and pays the rest. And that's for however much. That's why we have unlimited PIP for most of you. If you've picked that level, there's different levels. If that's the case, then what's happening is this fee is to pay for those people that have that unlimited PIP. So to pay the extra beyond what the insurance company has done. They've reached their obligation, they back out, now the MCCA kicks in and pays the medical beyond that. What's happened was we may have noticed that we got a few $100s back. It was $400 per vehicle refunded to us a few years ago. Well, they kind of mixed that up a little bit. So we have what's called now a recoupment fee, and you may have noticed it on last year's bill. Last year it was a little bit lower, and what's happening is going up $48 per vehicle. So you're going to see that on the bill. Now that's not just any vehicle, that's for your personal vehicle. There's different levels. So if you have a commercial vehicle, that also is going up $48. If you have a historical vehicle, that's only going up $9.60, so not as much. And then if you have a motorcycle, that one, if it's not historic, $48. If it is historic, $9.60. So it just depends on the type of vehicle that you have. Also, the level of PIP doesn't matter in the recoupment fee. The recoupment fee, because everybody got the $400 per vehicle back and we're recouping that money, everyone's paying for this. So when you see the bill go up that way, if it goes beyond that, now there's other issues because there are a lot of companies in our state filing rate increases. I've actually just spent a year trying to find this page, but I finally did it. I found the page where we can see rate increases that are being filed with the state with different companies. There's a lot of them. So keep in mind, if you guys are looking or shopping around for different insurance, we'd love to give it a shot. We work with over a dozen different companies. I'll put a link in the description below so you guys can check that out. But let's dive in a little bit further. Let's explain why the PIP is what it is and where it came from. So I've got kind of a cheat sheet. If you're talking to an agent, the definition of PIP, I guarantee you're probably going to get is it's just required by the state. It's the medical you have to have. You can choose unlimited, 500, 250, or lower, depending on if you qualify. That's not a really good answer, to be honest with you. If you want to know specifically what it is, let's actually explain it. There's actually 5 pieces to the personal injury protection. You've got your medical bills, your travel to and from appointments, you have your wage loss, your household services, and then you have what's called a survivor loss benefit, or other people call that a death benefit. The first piece is the medical bills. That's the level that you've chosen. When you watch the video that I'll link at the end for what level to pick, the different levels, you may have chosen unlimited personal injury protection, or you did 500,000 or 250,000. You can choose any of those levels without actually having to qualify. If you go below that, you have to do qualifications, and there are some other options. But if you're qualified for that and you choose whatever level you pick, that's what the main focus of personal injury protection is. We're called a no-fault state. So when you get injured, you go back to your insurance pays the bill. Once it maxes out, then the MCCA kicks in. And then if that happens and neither of those can pay, you have the ability, or if they don't pay enough, you have the ability to go after and sue that other person to recoup income that you didn't get. Because there are caps and limits to some of these coverages that may just end and you have to pay those extra out of pocket. Travel to and from appointments, you're gonna have extra expenses there. So if you have to either pay someone, which we'll talk about in a moment, or you have to hire an Uber, or you have to travel, or whatever the case is, it's gonna likely be more expensive because you're doing it more often. If you're majorly injured in an accident, if you have what's called a catastrophe catastrophe or a catastrophic claim, and you're having medical attention, if you have to keep going back for surgeries and whatnot, and all of those pieces that become part of that, you're going to have expenses from that. So the gas, the travel, maybe hiring someone to take you there and back because you don't have the energy to drive or you can't drive yet, and whatever that scenario is, that's going to be part of the personal injury protection. Wage loss. Now, a lot of people don't understand this part because wage loss gives a percentage. It's 85% of your wage loss up to a certain amount. And what that's covering is that's essentially saying they're taking the taxes out of it because they're not actually taxing the money that's coming in from the personal injury protection. So they're subtracting about 15% from what you would get. So they're just evening it out. Essentially, you're getting almost your full wage loss. It's just you're just not seeing the taxes that are part of that. The fourth piece is the household services. So if you have to hire someone to do some work in your home, it's a little different than what we're going to talk about here, which is the long-term care. The household services is like paying for the trash or paying someone to take out or do things around the house, mowing the lawn, pieces like that. So I believe you get $20 a day for the household services built into the policy. Now they won't show you and break it down for you because it's all just part of that fee. But this part is what makes up that personal injury protection piece. And that household services is to help you for the things that you can't normally do until you've recovered. The survivor loss benefit is essentially when somebody passes in an accident and your family has the ability to have or collect the survivor benefit. Now it's specific on the type of family, and that'll be another video that we make, so subscribe if you want to get more information like that, or just leave us a comment and we'll be happy to at least answer what we can. This essentially, let's say a husband passes away in an accident and the spouse is left without the income. Well, it does give at least a $20 per day that gives you that income back. And it is the same subject as the wage loss. So you're going to see the taxes already processed. You're likely going to see only about 85% of that coming back, depending on the wage that that person was making. This isn't a long-term one, so this isn't like we talk about where you have that lifetime value. This is a 3-year plan. You have this for the next 3 years to essentially do the burial expenses. That's all built into it, having that survivor benefit, the loss of income. And if you have an income where it's exceeding what you need, then it may adjust based on that as well. It's not just giving somebody extra money for the passing, but it's essentially the money that's needed for the situation. That brings up the next question. What if the laws or the coverages are not enough to cover the scenario? In the case we just mentioned before, you do have the ability to go after the at-fault party. Even though it's a no-fault state, it still doesn't neglect the piece where the person has the liability. So if your insurance doesn't pay it and their insurance doesn't pay it, and you're just kind of sitting there with nothing, you have the ability to actually sue that person and go after them for any additional or any losses that you've incurred because of that claim. I thought it'd be interesting to show you the chart essentially of what's claimed. So if you go to the MCCA's website, they actually have a document on there that shows the pie chart of what's the most claimed as far as medical. The first piece is they actually do go over the reported claims. So there's been 47,124 claims since the MCCA was in effect. And that actually went in effect in the 70s. I think it was 1978. So there's still about 16, almost 17,000 open claims to date, and they've paid over $21,346,850,000 out. The number one, the biggest piece of the pie, is for residential care. So that's the long-term care that we talk about. If your agent is talking with you about the personal injury protection, they're going to explain if you leave that unlimited, you may be giving up some of that long-term care. Now, can you add it back in? There's some options you have available, but that's the biggest number one piece of these claims. When you go home from the hospital, somebody taking care of you after the fact, having a nurse, a resident, or someone come in home or visit the home to help take care of you for certain situations. Maybe it's physical therapy, things like that. The second biggest piece was attending care, which falls right in line with the exact same thing, that someone coming in that's not resident and living in the home, and you're not living somewhere, you're not having someone live with you. That's those two pieces. So between those two alone, you're looking at 36% of all of the payout is because of those scenarios. Oh, and I have to add another 15% on top of that because apparently they have one called an attending care agency. I can just only assume that it's just more of a company that does it and actually does a full-time piece of it. So you've got just the resident care, that's where you're probably staying somewhere else, attending care agency, and then you've got attending care family, so that's your friends and family, because you can pay family members a certain amount. I think it's 56 hours a week if I'm not mistaken, but you can pay them to actually have care for you. That's someone you know. And then the rest of it is the doctors, if you're actually in the hospital for the surgery, prescriptions, and there's a few other pieces that just kind of get smaller and smaller as we go. The last change that you may want to know about is they have changed the way that the deductible works. So some of us have what's called our own medical, or they have coordinating medical benefits. And if you have qualifying health coverage, or care as they call it on our paperwork, you'll see that on your actual documents. That means you have a certain deductible that you've met, that you're not over what was $6,000 deductible last year. Well, going forward, that's actually raised up. It's going to be $6,615. If you have a deductible that's higher than that, then you can't go lower than certain limits on that policy. That was actually put in force in October. A lot of agents don't know that part, but it's going through September of 2023. If you're unfamiliar with the levels of personal injury protection and you need to learn more about the actual coverages that you should pick or offerings that you should have, I'm going to link our video for our PIP insurance for 2023 here. If you're just kind of learning the car insurance world or you're new to insurance, I'll go ahead and put our link to our Car Insurance 101, our ultimate guide. Otherwise, if you have other questions, put them in the comments below. I'm Mark with Valor Insurance. We'll see you soon.